exactly what you need to be doing while the market's crashing. I hope that sounds like a good plan. So first, let's take a look at the market and see what the market is telling us, right? The market has been telling us for a hot minute, for a real hot minute, that things weren't going right. We look at the SPY. We had the red light. We had the crossover all the way back here on February 21st. Today is April 4th. We've had 6 weeks or so where the market told us something wasn't right. Now, where am I getting this from? Where am I getting this from? If you see a close under the 10 EMA, consider that a red light. So take notes today. This is a take notes kind of day. A close under the 10 EMA means that something's not acting right. The 10 EMA is the indicator of the short-term trend. If the price closes under the short-term trend, that means price is going down. Will it go down forever? Maybe, maybe not. But at least you're out of the way when it starts to move down. Now, how many times has it closed above the short-term trend? Once, twice, 2 times in this whole move, right? And I said during that time, I said this may be a short covering rally. Receipts are on YouTube. You can go check it. And then, boom, continues on down. So first off, just knowing where the red light is at, a close under the 10 EMA. Second off, the outlier trend template with the 10 under the 20, price under the 50. These are your exponential moving averages. If the 10 EMA is less than the 20 EMA and price is under the 50 EMA, that is a bearish trend. You can't argue with me on that. That is math. It is absolutely math. And if you are trying to collect your shares right now, as your stocks have been destroyed, like Palantir, if you're trying to collect all these shares down here, or like PayPal, if you're trying to collect all these shares down here, or like Celsius, actually Celsius is pretty good, like AMD, if you're trying to collect all your shares like this, like Elf Beauty, if you're trying to collect all your shares like this, I got news for you. You will continue to lose money. You will continue to lose money day after day because losers average losers, winners average winners, and losers average losers. What does this mean? If you're trying to dollar cost average into these stocks, you're not going to do well. I'm here to tell you, you're not going to do well. Imagine these are annual candles, right? Imagine this is your retirement portfolio, and you've been putting money into this your entire career. And then you go open your retirement account and you're like, oh, thank Jesus, I can finally retire. You open your retirement account and it's down 59% from just the investments you put in. There was no compounding growth here. From just the investments you put in, down 59%. How would you feel at that point? But I dollar cost averaged the whole way. I dollar cost averaged forever. It doesn't work on this side of the curve. It works when it's going up, but it doesn't work when it's going down, right? If you dollar cost average, this is going to blow your mind. If you dollar cost average at 115 and again at 100, and then you buy some more at 80, and you buy some more at, let's say, 70. The crazy part about this, and this is why I get so mad, is that your average price at these levels going down is the same as your average price at these levels going back up. So why are you averaging down in the first place? If you're trying to get the lowest price, wait until the outlier trend template reverses, it starts going back up, and then start making your buys. Because then you're averaging into a stock even at the exact same prices you would have done before and getting the exact same average cost. So first off, know what the market is telling you. And the market has been telling you for a while, it is downtrending. Now, something else you need to be aware of is the market, your stock doesn't exist in a vacuum, right? The market momentum motto, if the market's 40% going down, if the sector is 30% going down, that's 70% of your stock's move is outside of the control of your one stock. And yet you're buying these stocks thinking that you're a genius. You're the one person in the world that things are going to go back up for. You're a genius because AMD, you averaged down all the way from 150, 130, 120, 110, 100. Now it's down at $87. But you're the genius. Because you averaged all the way down. I'm sorry, but we're going to get real cranky today. I'm cranky AF. You're the genius averaging all the way down, thinking that you're smarter than the market and that it has to go up from here. It should go up, right? It's such a great company. It has to go up from here. It can't possibly go any further down. Have you not seen their revenue growth? Have you not seen their EBITDA? Have you not seen their price to share ratio? Who gives a flying flip about that? All that's happening is prices going down. And if you're the guy who's loading up the boat, you might as well go to the post office, change your address to Bagholder Village, because that's where you're about to live for a hot minute. Now, will this stock go up? It might. But we don't know when it's going to happen. We'll be able to tell when it has happened using the outlier trend template, but we don't know when it will happen. I can't tell you the date. But in the meantime, you could buy this stock and be sitting on it for a year, 2 years, 5 years. And then on the other side, when it finally does get back to break even, you're going to be like, see, I told you. But in the meantime, you've lost your house, you've lost your wife, your kids hate you, you have no more hair left, you've gained 50 pounds because you've been stress eating. Or you could just not buy the stock. Or you could just get out. You could go to cash when you get a red light. Good gravy. I'm so worked up today. So, what is the market telling us? The market is telling us it's going down. We know this. Now, what exactly do you need to start doing in the meantime? In the meantime, I want you to go on Amazon and I want you to get a handful of books. First, this is the #1 best book I've ever read in the history of time for trading. It's called New Trader, Rich Trader. This is by my friend, Steve Burns. And for those of you who have read it, you can put it in the comments down below. How closely do you see the way that I trade portrayed in this book? I mean, 80% of what I do is right here. Next book you need to grab, The Complete Turtle Trader. This is a fabulous read. This is about how Richard Dennis took a group of traders, a group of people who had never traded before, and made them all basically overnight millionaires. Right? But the thing is that Richard Dennis says, I always say you could publish the rules in a newspaper and nobody would follow them because the key is consistency and discipline. That is why having your trading plan, having your own plan, will separate you from most everybody else. This is what separates the best from the rest, is just having a trading plan. Next, go pick up this book, Trading in the Zone. This is by far the #1 best book on trading psychology ever. And the biggest lesson that I took from this, that I really struggled with for a minute, was I don't have to know what's going to happen in the market to know how to make money. Now, you're probably thinking to yourself, what do you mean you don't have to know? What do you mean you don't have to know? If I'm right, I can hold it. If I'm wrong, I need to get out. So let's share a couple posts that some of my favorite people in the world have ever made. Starting with myself, right? Very handsome guy right here. Today is the day to take the opportunity to turn your small losses back into cash before they become big losses. Do not let this opportunity pass you by. Do not do that. Those who ask me where the market will be in a year or at what level the S&P 500 will bottom totally misunderstand what it takes to be a great trader. I am in the business of responding, not prediction. Telling the future is impossible and unnecessary. Trading is a now business. Another one from Mark. With the market in correction, this is where the willingness to exercise sit-out power is key. Remember, while you do nothing, less experienced, Lesser disciplined and less skilled investors like the Joker are going to lay the groundwork for your success. Let them buy the stock. In the meantime, let them build the bases and we'll buy the breakouts. What does that mean real quick? Let them be the ones who are putting their money at risk in a stock like Nvidia to let it find its bottom. Let them buy Meta on its way down. Let them do that. Let them buy the mess out of it. Because at some point, enough idiots will have bought it where, you know what? It starts to turn. It'll be like this. It'll be like this. Where right now, everybody's screaming sell. You, because you are smart, you're an outlier, you've been sitting on the sidelines for a minute. And they're going to continue to scream sell for a while. Let them scream their faces off for sell. And at some point, there's going to be people who are going to start to buy. Let them buy it. Let them. You don't have to be one of them. The most expensive parts of a trend are the top 10% and the bottom 10%. The easiest parts of the trend, which is what you're after, is easy money. Am I right? The easiest parts of the trend are the 80% in between. Do not get suckered into somebody saying this is the bottom. It doesn't matter how big of a YouTube channel they have. Do not get suckered in to somebody saying this is the top. It doesn't matter how big of a YouTube channel they have. Figure out what works for you and start executing on that. Here's another quote. When you evolve to the point of always being patient and only taking quality trades, that means you've decided you're not in it for the action, but to make money. You have sit out power. You never force trades because you're a pro. You are a pro. If you've been listening to what we've been saying for the last several weeks, you are a pro because you have avoided, you have sidestepped these kind of moves. You have sidestepped terrible stocks like PayPal. You have completely avoided getting suckered into something like Nvidia. You are sitting on the sidelines because you know how to read the market and let the market tell you what it's doing. So, continuing on. Next book you need to pick up, How I Made $2 Million in the Stock Market. I love this book. I probably have 40 tabs on the side of this book. This book, actually, this particular one, get the one also written by Steve Burns, the very same Steve Burns that wrote this one. He added a lot of updated notes because this book was written in the 50s. So Nicholas Darvis was a dancer, like a dancer. Like he would go on stage and dance. Dude didn't sit at a computer all day, didn't watch YouTube. And the only thing he did is he would get his broker to telegraph him the closing price of the stocks he was interested in. Telegraph. He traded by telegraph. And what he would do is he would do his own charts and he'd say, okay, it looks like this stock is moving up. If the stock is moving up, I'm interested. Let's buy some. If the stock decided to go down, he would immediately get out. Immediately get out. In fact, he would probably say something like this. There's no shame in losing money on a stock trade, but to hold on to a loss and let it get bigger and bigger, or even worse, to buy more is amateurish and self-destructive. Are you cool with being amateurish and self-destructive? I'm not. I'm a pro. This is what I do. This is why God put me on earth. This is the trade. I just feel exceptionally blessed that I get to share it with you. Finally, YouTube decided after 2,000 videos that it was going to start sharing this out to more people. You're welcome. It's all over the YouTubes. You can follow my journey all the way back from, I think, 2017 to now. You'll see I have evolved quite a lot. I've made all the mistakes that you've made. All of them. I've lost hundreds of thousands of dollars in the market. I've also made a bit more than that. And the way that I did that was figuring out what worked, what didn't work. And then I got to share that with the internet. But nobody listened for a hot minute. Nobody listened for ages. And then the last book I want you to pick up is called Trend Following. This is the very best $10 I've ever spent in my entire life. Now, this is the 2004 version. If you can get your hands on the 2004 version, it is better than the other versions. I have read the 2004 and the 2012 version. The 2012 version is about 50% thicker than this. Doesn't read as easy. This reads super, super easy. I'm going to flip to a random page. I did not plan this. I'm flipping to a random page, and I'm going to read something that I underlined at some point here. Let's see. I find a page where I underlined something. How about this? Page 196. The trick in investing is to not lose money. Here we go. See where I underlined right here. The trick in investing is to not lose money. That's just a random page that I picked out. Crazy thing is, there are so many people who want to sit here and tell you, now's the time to buy. Go be a brilliant person and buy as much as you possibly can. I'm here to tell you, do not do this. Will prices go up? Probably. But in the meantime, you don't have to be stuck. How many times have you taken a trade, which was supposed to be like 8-10 days, whatever at the most, and you held it for 2 years because you're like, well, I can't sell it. I guess I'll just be a long-term investor. I guess I'll just hold on to this until I get my money back. No, that ends today. That ends today. You have 5 potential outcomes of a trade, but one of them is not allowed ever again. Number 1, a big win. You get into a trade and it just runs. It is the best thing you've ever seen. It is so easy. I love when I get those kind of trades. Number 2, it's a small win. You get into it, you get your exit signal, you get out, you made a few bucks, no big deal. Number 3 is a break even. You get in, you get your exit signal, you get out, right around break even, call it a scratch, no big deal. It's part of it. Number 4, a small loss. You will take losses. As of today, just get used to it. You're going to take losses. But those small losses, you can control before they turn into big losses. You have control of where you get out. I'm talking to you. You have that control. You can decide, okay, I'm out. This didn't work for me. I'm going to move out of the way, and I'm going to let some other sucker hold it all the way down. I'm so over this. But I also love this game. I love this game so much. This game has made me so much money because I love to play it. So that's what you need to be doing right now while the market is crashing. Take a look and learn how the market works. Pick up these 5 books. It might cost you $100 total. And trust me, if you didn't invest in stupid ass stocks like you had been, you would have still had $100 to invest in these. Okay. So again, how I made $2 million in the stock market, New Trader, Rich Trader, Trading in the Zone, The Complete Turtle Trader, and Trend Following. Get these 5 books, spend the next few weeks reading them, and then come back and tell me just how much money you've made since then. Because I'll tell you one thing, not one word in any of these books will tell you to buy a dip. Not word in any of these books will it tell you this is the key to making the market, which is buying the stock as it's going down. No, sir. No, ma'am. So with all that said, let's start looking at some of your stocks. And if you tell me a stock and it's a garbage stock, we're not going to be cool anymore. We're not going to be cool anymore. MI6 will send random guy, to come and take you out of this stock right now. So forgive me for my pontificating, forgive me for my soapboxing, but I'm telling you, I am so sick and tired of YouTube promoting BS artists. Because what they're doing is they're actually hurting investors like you. They're hurting people like you who want to learn, who want to be successful, who want to make more money in the market. And what they're doing is they're doing the opposite. They're making sure people like you continue to make the same mistakes that these terrible people have been pushing for you. So I want to know what stocks you're looking at. Listen, this is well, I would normally say this is a judgment-free zone, but today I'm going to judge you. Today I'm going to judge the mess out of you. Daddy-O is right. Cash is the trade right now. Cash is the trade right now. Nothing long for now. Vince is right. Daddy-O says cash short. Even that. Tony just said he's bought all 5 books on eBay just right now. Manny, I'm afraid to give you a stock pick right now. Dude, I get it. And honestly, I don't want you to buy any stocks right now. Not in the slightest. Not in the slightest. We can look at a few of them, but I'm telling you, there are no. In fact, this is one of the things that I tell you guys all the time. All stocks are bad, but every once in a while they act right. Can we dissect what that means real quick? All stocks are bad, and every once in a while they act right. That means if you are putting your money into a stock, it inherently has market risk. That market risk is not just the stock itself, but it's the market, it's the sector, and then it's the stock. And when you have that market risk on, you need to be like a guard at a prison, okay? If you have your money in a cell, aka you have your money in a stock, right? If you've locked your money up into a stock, here we go. I'm gonna see if this analogy makes sense. If you've locked your money up into a stock and you're the prison guard and you're watching it every single day to make sure it doesn't Epstein itself, you're making sure that nothing happens to that stock. It's going to stay in its prison. It's going to stay locked up in something that's working. But the moment that it escapes, it is your job to chase it down and either get rid of it or put it back in the cell. I don't know if that's the best analogy of all time, but what I'm trying to say is all stocks are risky. All stocks are dangerous. If you have money in the market, it is at risk. And it is your job as a sophisticated investor to make sure that you do not let that stock run away from you. You do not let that stock take your money. Splat says he's feeling so grateful to me at the moment. Dude, I'm grateful for you. Now, I'll be even more grateful when you tell everybody you know about this. Mari wants to look at LOCL. Mari, you're one of our regulars. So I really hope this is a good one here. I really hope this is a good one. LOCL. All right, we don't cover LOCL just yet. That's okay. LOCL. So you do have the bullish crossover right here a couple days ago. So you could consider this right here a green light. Right, your 10, 20, 50 are crossed up. You've got a giant order block right here, an enormous double overhead order block. Mari, if I were trading this stock, which I wouldn't be because the market's going down, but I would be looking to take profits today. I'd be looking to take profits today. Let me remove this. If the 10 and 20 period EMAs cross, if they cross down, that is my exit signal when it's inside of an order block. So I would be watching that one. I'd be watching even closer because of the fact that the market has been so weak. It seems like we have a lot farther to go. We might, but we don't have to make that prediction. We don't have to be one of those YouTubers who makes predictions and says the market's going to go up 1,000,000% from here. $75 in this one stock and you'll retire. Give me a freaking break. No. I want to see some of these jokers debate you. I know, me too. I want to see Tom on the show. So yeah, that, you know what? I don't want to look at any stocks today. I'm too pissed off. I'm pissed off because the fact that there are people telling you right now today's the best day ever to buy. Here's the takeaway I want to leave you on this video. First, buy stocks when they're crashing up, not stocks when they're crashing down. What does that mean? You want to be buying stocks when they're in their stage 2 uptrend. You want to be buying stocks when they're in their stage 2 uptrend. So many stocks are right now on this side of the curve, right? Stage 1 is the bottom. Stage 1 is where it's trying to figure out what it's going to do. Stage 2 is the big move that everybody gets so excited about. Stage 3 is the topping pattern where the moving averages start crossing back over. Stage 4 is the decline right here. And let's just for funsies, go look at some of these today. Let's just for funsies, look at a handful of these. How about Microsoft? just for funsies, let's go see. Oh, look, it's in a downtrend. Would I buy it here? Not even with your money. Let's go look at Apple. Would I buy it with your money? Heck no. I respect your money more than that. And you can tell just by putting those 3 moving averages on your chart. From now on, you'll know if a stock is trending up or if it's trending down. So key takeaway number 1 is buy stocks as they're crashing up versus when they're crashing down. Number 2, wait. Have some patience, people. Figure out what you're looking for to get in. And you need to decide that, not me. Figure out what you're waiting for to get in. And once you see that, go for it. And it certainly better not be, oh, the price is down 18%. I need to buy some of it. No, dude, because it could go down even further. Oh, man, I forget where it is in the trend following book. But he talks a lot about how people say, oh, this has to be the bottom. It has to go up from here. It should, which is the most dangerous word in finance. It should go up from here. And here's the deal. Will it go up from here? Will Monday be the day where the SPY bottoms and comes right back up? It absolutely can be. Absolutely. But you don't know that. I don't know that. Nobody can predict that. And what we want to see is it trending higher. 1, 2, 3 days does not make a trend. And I know that a lot of people got really suckered into this move right here, this short covering rally. But not us outliers. The receipts are on YouTube. I was telling y'all this whole time, I believe we're about to see a short covering rally. That's what we saw. And now it's even further down from there. So if you decided you were going to buy the dip, you're hurting real bad today. So pick up those 5 books, learn how the market works in the meantime, and stop buying dips. That's my big takeaway. That's what you need to do in the middle of a crash. So listen, thank you for allowing me to vent for a few minutes. Cheers to you for having come. And YouTube is going to pop up a couple recommended videos. I recommend you watch one of them, and I recommend you have a fantastic day.